Hey everybody, it's me, Gregory Mannarino, back for what I believe really is going to be an especially lovely post-market wrap-up for this Wednesday, September 12th, 2018. I got a lot of stuff I want to talk about. I hope I don't lose it. I'm going to try to stay calm because a lot of information came at us today. I want to try to put that into a perspective right here and right now. First off, for those of you that took the time to watch my interview with Greg Hunter that I just did, I appreciate the comments. Most of you thought I handled it pretty well. Some of you thought I went a little off the deep end. I don't know. Anyway, it seems like you enjoyed it. If you had not seen that interview as of late or yet, I will place a new link in the description of this video. Watch it. Let me know what you think. Did Greg lose it or not? Right now, it's Greg didn't. So anyway, I'll pay attention to that. But how about this? I don't even know where to start. Apparently at one point today, it was floated out that we here in the United States, the Trump administration, reached out to China to discuss trade. You know, we're in a trade war. When this news came out, all of a sudden the Dow Jones Industrial Average went being from about flat to up 170 something points. Well, you know, the Dow Jones Industrial Average gave almost all of that back, and by the end of the day, the Dow Jones Industrial Average finished up only fractionally. The S&P 500 finished up fractionally. The NASDAQ finished in the negative. But let's put another perspective on this. For those of you out here, I know you'll back me up on this, who know negotiation tactics. Okay, like for example, if you're going to buy a new car and you're negotiating here with the salesman, you don't speak first. All right, just doesn't get done. You let the salesman speak first, he loses, or she. Whoever speaks first always loses. Whoever goes out of their way to try to say, hey, you know, maybe we should do this. It's a sign of weakness. You understand? So I kind of expected this, honestly. We're being fist-fed, and I mean double fist-fed, all kinds of nonsense and lies. Let's talk about more lies that were being fist-fed here. So, this is as good as it gets. You know that. This is an economic boom. You know that. Well, the Federal Reserve today, their beige book on economic activity, kind of, no, they're painting a little bit of a different picture, going completely against the president. Well, according to the Federal Reserve, our economy is growing, but at a moderate pace. Not just is it growing at a moderate pace, not a strong pace, moderate, but there are pockets of weakness in the economy. That sure as hell doesn't sound like a boom to me. And if this is as good as it gets, we're in a lot of trouble. Let's talk about the Federal Reserve a little more. Boston Federal Reserve President Eric Rosengren came out with a stunning admission today. He said that the Federal Reserve's monetary buffers, sit down, are depleted. This was, I almost fell out of my chair. Look, all that's kept this whole thing going is, you know, the Federal Reserve keeping their foot to the floor with regard to suppressing interest rates like we've never seen before, which has inflated the stock market bubble, inflated the housing bubble, hyperinflated the world under a debt bubble, and now we get a Federal Reserve president saying, you know what, we got problems here. We've depleted our buffers. I think what he's really trying to say is in the event of an economic downturn, they got no bullets left. Now, if you recall, you see this guy sitting right here? I've been explaining to you for years that in the event of another meltdown, which is coming, or a correction to fair value, or a reset, you know, there's a lot of terms being thrown out here, but it's all the same thing. When all of this corrects to a fair value, the Fed is stuck. They can't do anything. they're dead in the water. Let's look at other world central banks right now. Let's look at emerging markets. You know how I hate that term because these are people that are suffering, not markets. Well, all over the world, these emerging markets are under pressure. Their currencies are melting down. Their central banks are virtually powerless to do anything except at least attempt to skyrocket interest rates to try to stabilize what's going on. It doesn't work. We've seen this before. Last time we bailed out banks, this time we're going to bail out countries. This is an incredible situation that we're in. So a couple of very amazing things to me happened today. This reaching out to me again with the Trump administration to China is a sign of weakness big time. The market initially got a little rise out of it. And then, obviously gave all of it back when they said, hold on a second. Well, why are we doing this? You know what I'm saying? Negotiation tactics 101. You shut your mouth. You let the other person talk first, period. That's simple. Then we get the Federal Reserve's Beige Book. I am more than certain that President Trump did not like hearing what came out of the Beige Book today. Pockets of weakness, moderate growth here. And then we get Eric Rosengren, Boston Fed president, saying, you know what, we're in trouble here. We're running out of ways to keep this propped up. That's the truth. And we all understand that. Again, there is going to be a finite point. I call this a moment of maximum saturation, for which I spoke about in the interview with Greg Hunter. We also found out a few other things today. We've been hearing for a while now that there's a labor shortage, skilled workers. Well, the Federal Reserve today, sit down for this one in case you happen to get up, is saying that there is a widespread shortage of workers to fill positions at the lower end. Well, why would that be? Maybe because no one wants to take these positions because they're not paying anything. Well, how about giving people a raise? Oh, no. We can't do that. Can't give people a raise. No, can't happen. So anyway, you can see the charade. All you got to do is just peek under the curtain. Oh, yeah. Oh, yeah. Gotcha. Come on, people. We all understand this. Now, let's talk about something else here that I want to cover again in a little more detail. So we continue to get fist-fed, like you can't believe, about these great numbers with regard to unemployment. They're not real. You know that. How do we know they're not real? President Trump himself admitted the way they calculate these numbers was not real. Under President Obama, they have not changed the way the numbers are calculated. But now, President Trump says not only are they real, but he talks about them like, there's no tomorrow. Okay. We also understand the labor force participation rate, the amount of people actually in the workforce, is lower today, sit down again, than it was during the financial crisis. Now, there are some out here who believe the lie. Here's the lie. You ready for the lie? The lie is, we have all these baby boomers retiring. About 10,000 per day. Comes to about 4 million per year. But what these people are failing to add into the equation is colleges, universities, trade schools. They're graduating about 5 million per year, which are ready to enter the workforce. So we are getting a net positive. You understand? So these are the people that are completely misinformed. They have no idea what they're talking about, but they hear something and then they regurgitate it like vomit. You understand? Without understanding at all how this whole thing works. So twisted. But again, you got the people on this side of the bell curve, the people on this, this idiot group number 1, idiot group number 2, and then you and me. We're up here. And that's the truth. So anyway, so what do we got to look forward to here? Well, a couple of things, believe it or not. Gold and silver did put on gains today. The dollar got weaker. Okay. Cryptocurrencies are stabilizing here. Now, I wrote a whole article about cryptocurrencies recently, still available on Steemit. I said watch for a short-term hard sell-off, which we got. I wrote that article 5 days before that sell-off occurred. I also said it would be short-lived and it would turn around. I still stand by that. We'll see how that plays out moving forward. with regard to this market, look how it responds to things. Oh, we're reaching. We're going to offer an olive branch to China. Oh, yeah, we're going to be friends again. Up 170 points. Then, oh, wait a minute. What's going on here? I thought we were the strong ones here. Oh, maybe I got that wrong? Oh, maybe, huh? And the absolute, the Federal Reserve absolutely contradicting our lovely president there. He won't talk about that. Oh, no. But he's going to tell you about the fake unemployment numbers, but that he admitted were fake. But now they're real. Very interesting, don't you think? All right, look, with that said, I think I covered some important things here. If you believe that's true, please, you know how I love to see a thumbs up. You know I also ask you to share this stuff. If people want to hear some of this information, because you're not going to hear it anywhere else, at least on the mainstream. Anyway, with that said, I will see you, my lovely, lovely friends, in the morning, right back in this lovely spot. What fun we're going to have.